Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate filings into something you can actually understand. Today we are diving into the amended version of Totaligent's report from about a month ago. Let's see if this company is a genius at marketing or just really good at, well, marketing their reports. Get ready for a roller coaster because this one has some twists and turns in its financials. So first off, what's this all about? Totaligent, formerly known as Alltemp, filed an amendment to its annual report. Basically, they're fixing some mistakes and giving us more details about stuff that happened after the original report came out. It's like they realized they forgot to tell us a few important things the first time around. Totaligent is a tech company that wants to help businesses and people with their digital marketing. They aim to use data to make marketing more efficient. Think of them as trying to be the smarter way to get your message out online. Their platform is supposed to help users easily use data to target the right people. They launched a public version of their marketing platform in early 2025. It lets pretty much anyone use data to improve their marketing, which could be a game changer. The industry Totaligent is in digital marketing is changing really fast. It's all about using data, having good tech, and making things personal for customers. Companies like Totaligent are needed because everyone's fighting for attention online. Totaligent helps businesses and people target their marketing, and the platform lets you get super specific with who you are trying to reach. Even down to what zip code they live in, Totaligent makes most of its money through managed campaigns. This means they run marketing for other companies and people, and the company thinks it will be the main source of income before the new consumer platform gains traction. To get bigger, Totaligent has a plan. First, they want to work with channel partners. Think of these partners as influencers who are big in the digital marketing world. Next, they want to keep making their platform better. They're talking about adding new features and keeping up with advertising rules like those from Google or Facebook. The company also plans to buy other businesses. This means they might buy smaller marketing platforms or tech that helps them do things like data analysis. Here's the less fun part, risks. These are the things that could really mess with Totaligent's business. One big one is that they have limited operating history, and we see they are in their development stage, so it is really hard to guess how they will do. Their accounting firm has expressed doubts about Totaligent's ability to continue as a going concern because the company is in a difficult financial position. This is a big red flag that they might not be able to stay in business. The company says they need to find more money to keep going. If they can't get more financing, they might have to cut back or even stop their operations. Totaligent also acknowledges cyber attacks as risks. With all the information they handle, a data breach could be a disaster, hurting their reputation, costing them money, and causing customers to leave. Also, the business could be negatively impacted by changes in the US political environment and a failure to comply with data privacy and security laws and regulations. Their stock doesn't trade very often, and the price goes up and down a lot. This means people who buy their stock could lose a lot of money. Also, they don't pay dividends, so don't expect any cash payments anytime soon. Now for the real meat of this report, the financials, and wow, is this a story? First, let's talk revenue. So decreased from about $731,000 to $444,000. That is almost losing half of their income from 2023. Plummeted from around $250,000. That's like losing over 80% of their profit power. Almost tripled, going from around $119,000 to $352,000. Meanwhile, some more than doubled, jumping from $402,000 to $947,000. The auditors are ringing alarm bells about the company's liquidity and going concern status. This means Totaligent does not have enough cash to cover short-term obligations and is at risk of going out of business unless they can get additional funding. So they have more debt, which means they're paying more in interest, close to $50,000. And if we scroll further to see, the company did not pay any interest during this year or the last one. Astra Audit, the company's auditor, has concerns about the company's ability to continue as a going concern. Diving into the balance sheet under liabilities, we see the fair value of derivative liabilities increased from $128,052 to $158,052 to 100 feature that allows the note holders to convert the debt into shares. These derivatives, while complex, serve to protect the holder in case things go south, although they might spell trouble for current shareholders. If we scroll to the equity section, we see the shareholders' deficit increased significantly from around $900,000 to over $1.7 million. Even after the period closing, the company had some hiccups, mostly on erroneously issued stock, of course, that was dealt with, and the shares were, quote, deemed void ab initio, cancelled, and permanently retired. The filing does not describe the reason for those accounting failures. The company currently has no independent directors as well as no standing committees. Now, stepping back to look at the bigger picture, Totaligent is facing some serious headwinds. It seems like a lot of their struggles really come down to this massive increase in expenditure with very little return for shareholders. While the company is positioning itself in a growing market, it's difficult to look past the numbers. They are burning through cash, have increasing debt, and are getting warnings from their auditors, which means this is going to be a bumpy road. The greatest risk is the real threat of Totaligent not continuing as a going concern. Artists, thanks for watching. If you enjoyed, please subscribe, like and comment.